Good morning, Academy55 premium members and everybody else who's watching the recording. David Kahn here on Thursday, the 20th of June. It's now 4 minutes to 8 in the morning, and it's time to say hello. And we're looking at the Academy55 strategy on the 1 minute time frame for the EUR USD. For the next hour between 8 and 9, see what's brewing, see if we can get a trade or whatever. First things first, let's do a little bit of housekeeping and check our MT4, making sure we are on the EUR USD on the 1 minute time frame, putting your 1% in the risk and making sure your risk to reward is in purple, your lot calc is in purple, and this little button here, in case you need to close all trades. There's several ways you can do it, but this is the easiest one. Make sure that's all done. And of course, you've got your Academy55 template up and running on the back of your MT4 or MT5, as the case may be. So that's the housekeeping done. What can we see? Well, if we put it on the 5 minute, next to our zones, we are in between zones at the minute on the bigger picture. And we are underneath the purple line. So we've got a sell bias going on, just the same way as we would do on a minute time frame. This is a 5 minute time frame, and price likes to hug along this purple line. We can see not a lot of volume going on for quite a considerable amount of time, but now it has opened up to the sell side, possibly going into this imbalance area that was drawn up on the hourly, maybe. But we got a buy zone here, so we have to be very, very cautious when we get to this area. They might negate that and go into the other buy zones down here, and of course that means they can then tap into this imbalance area. So we haven't got any Euro news at the moment, which would affect us, but I want to draw your attention to this here on ftmo. This is the ftmo economic calendar, and this red bit here means at in 30 minutes time, you're not allowed. They don't want you to trade the CHF because of high probability news. They're affecting the CHF. That won't affect us on the EUR USD, but the CHF is closely connected to the EUR. So in other words, some people have Swiss bank accounts and all that sort of stuff, putting money in, taking money out. And if you were trading the CHF in any form, 2 minutes before and 2 minutes after, you're not allowed to trade though if you had a live account, or you would be penalized. Just wanted to draw your attention to that. So we've done that. So right, so as we can see now, though, we have we had a sell going on, but I didn't like that because the trend line's down there, so you wouldn't be able to get into the trade there. That's forming imbalances. So personally, I wouldn't like that sort of trade because of the volume candles it took to get down there, and then you wouldn't be able to get in until there. But having said that, was it successful? I don't know. Let's have a look. Could draw it up anyway. So you wouldn't be getting into about down here. You've got to leave 2 pips, which would be there. Yeah, and you're 2 to 1. So your 2 to 1 would be down here, and I wouldn't be happy about that. So that's not the sort of trade I'd like to take. That was for me. If it does if it does eventually do it, so be it, let it go. But because of this large volume, and then you couldn't get into the trend line was above the price, so and you got to give it 2 pips wriggle room. So yeah, so I wouldn't like that scenario personally. So we can see a lot of accumulation at the moment. Volume has run right out. Didn't trade. I didn't trade yesterday personally because of the American bank holiday. But if we had traded yesterday, I noticed we probably could have won. But the probability of being no volume is high. But the thing is, you just don't know. But going by probabilities, you would think the volume would be low. So that's why I just didn't bother. One of the advantages of trading and having a goal of 10%, around about 10% ish sort of thing per month, is you can pick and choose a little bit more, choose to trade more higher probability sort of scenarios, and that wasn't one of them yesterday. Like tomorrow, for example, we've got loads of red flag news tomorrow morning, so shan't be trading then. But if you've been with me for some time, you'll know that I've actually passed my my percentage for the month, and I'm trading on demo now for the rest of the month. Got a few grand in my back pocket, and feeling rather pleased about that. So, but a very strong commitment to you guys to keep trading, and I would still trade as if, well, I always trade as if it's real money, even though I'm on a demo account. That doesn't leave me. I've got in the habit of doing that, and you should get in the habit of doing that also. Treat your demo account as if it was a live account, because this is all habit based. Because when I look at support and resistance lines, I drew up for myself in a 4-hour chart, and in balance, I just naturally do it. I don't have to think about it because I've done it for so many months and years that you just do it like when you're riding a bike. You have stabilizers, and then all of a sudden you learn your balance. Well, you don't even have to think about it. You just do it, and that's the scenario I'm at. But you do that through repetitive action all the time, looking at support and resistance lines, drawing them up, looking at imbalance, drawing it up, looking at the zones and drawing them up, putting the yellow line there and a yellow line there, and you just do it automatically because you've done it for so many times. So I never apologize for repeating things several times, because even now sometimes I hear the people I learn from voices in my head. No, not that sort of voices, but have you looked at the imbalance? Check the imbalance. Have you checked the support and resistance lines and all that stuff? Where's the parabolic SAR, all that good stuff. And so I just automatically do it all, and you'll get there like that after a certain amount of time, and that's no bad. That is a very, very good thing to do. So without even thinking about it, you check for all these things before you even contemplate trading and get to know where you are as far as price action is concerned, especially getting to recognize accumulation. And this is where we are at the moment. But there is a general consensus to go down. As you can see, the purple line is quite a way away. So if we do get a buy, that's the next alert I can get is a buy, because that's how it works. We got buy, sell, then the next one has to be a buy. So we can't react on this sell. Like I said, I wouldn't have taken this one in the first place, although I do recognize that the buy zone is down here, and there is a possibility of this playing out to our favor in the meantime. But I wouldn't be happy taking that one because of, like I said, the trend line is so low, and we've had a sell off from there. It's gone quite a considerable distance before we even get into the sell. And like I said before, we only need 1 or 2 trades a day. So I want to be a bit choosy and choose the highest probability that I think are going to. I mean, don't get me wrong, so we're all wrong sometimes. Like I said, this could, I could well understand why this would easily hit take profit before reaching the buy zone. But equally, it's like to have a retrace up to hit this, up to these areas here, in which case this scenario here, one position, this scenario here where the wave turns green again, all of a sudden things change, going up to see these imbalances up here. Try that to a 2-to-1. So if things did change for a buy, as you can see, the take profit at the moment would fall in line with that imbalance that's being caused, that we know needs to be filled at some stage. We just don't know when yet. So that could be a scenario, or indeed they could carry on down to these the buy zones here right away. There's orders down here. Order. This is the zonal order area. Orders have been. Let's see if we can follow it along. And this is where it started. Yeah, there's orders. There's orders in here that may need to be activated, and they can maybe see that there's millions of pounds of equity tied up in stop losses and orders for a buy, and they may wish to come down and take all these stop losses out. Stop loss at the end of the day is an order for a buy or a sell. So they could very well drive price down to this level here, take the money out for themselves. That's how they earn the money off us retail traders. But they might be waiting until after the Swiss news. I don't know. Swiss news is about 20 minutes time. It may affect the euro a little bit. But we'll see, won't we? But as far as ftmo is concerned, They don't want you trading the. If we was on the Euro Swiss, for example, we wouldn't be able to trade 2 minutes before and 2 minutes after, at least, because of their rules. If he was on a live account, if he was on a demo account, yeah, you can still trade. But like I said before, the best thing is to train yourself to treat your demo account like a live account and act accordingly. But because we're on the EUR USD, it won't affect us. We don't have to do that. And indeed, if there was major red flag news, I wouldn't be doing this live trade anyway. Stay away from it. I would have picked another time of the day, perhaps. I would have known that last weekend when I planned these weeks, plan a week in advance. But at the moment, yeah, we are sailing towards the buy zone down here. So not a lot to report at this stage. Like I say, it's nice to see so many people on this morning. Sky's a bit murky, a bit cloudy, a bit murky here in Cornwall, but I think it might brighten up later. And Cornwall in the southwest of the UK, that's where I'm based. I hope you're all keeping your journals. And for all premium members, you get to have a look and keep and download my journal and then turn it into your own if you wish. This is mine from for this month. And as you can see, 11.5% just done on these lives. So if I do have a result today or whatever, I will be putting it in there after the event. So yeah, that's this is my journal. Go and have a look at it. And if you haven't already done so, I do encourage you all to have a journal. And then you can find out whether you're any good at this, whether you. And also I would encourage you all to back test if you're able to do so. Especially if you're picking a different time to this. And how to do that. Steve has done a magnificent job of doing some training videos for us in the back, and that's all in there for you. So at the moment, we could have one of those sessions where, well, you never know. I don't speak too soon because we might get down to here and we might have found a lot of orders come in here around this area here, and there might be millions of pounds of stop losses for a buy scenario. So therefore, they might be fulfilling that. Because this is the hour probability wise, when you get the greatest probability of directional changes or carrying on the direction that they started up here. And we've been officially been on a down trend since well, here really, yeah, hugging the purple line, and since 3:15 this morning UK time, we've been in more or less a sell bias. But sometimes, quite a lot of the time, if that's called the Asian session, and during the Asian session, if there's a predominantly sell bias going on, by the time London comes along, they like to change it to a buy. And then when New York comes along, they like to change it to a sell predominantly. But in between times, you've got these much shorter up and down movements, of course. So we bear that in mind, but we don't pay too close attention to that, because after all said and done, we're on the minute and we are concentrating on what's happening as of now. But if you was a longer term trader, you'd be looking at that. If you were trading on like the hourly, the 4 hourly, or even the 15-minute, you'd be looking at that scenario and acting accordingly off that. But like you say, after acting on the minute, we have that in the back of our mind, the overall directional, but it's what we're concentrating on is the present, what is happening as of right now. Let's see, it's only a 2-bit move. Oh, 2-bit move, right? So right, we have a buy alert, but like I say, got the MT4 on. Waiting for the trend line to turn green. Stop loss has got to go there, where the wave turned from red to green. That's where the stop loss has got to be. We've got a green ribbon bearing up, but bearing in mind this is imbalanced now, which is something to bear in mind. But we're underneath the purple line. Just waiting for the stop loss, the trend line to turn green. And the way it's acted before, although we had a bit of volume there, I mean, I wouldn't be surprised if we're waiting for the 8:30 Swiss news. I'd be very surprised if they make a move just before that. But you know, you just don't know. Trend line has turned green now. Oh, sorry, I changed. So he said buy stop. So we wanted manual. I didn't want to buy stop. I wanted to buy. So right now it's coming down to maybe mitigate this imbalance here and indeed carrying on. So personally, I'd like a bit more of a commitment for a buy. Yeah, it means a bigger stop loss. I'll take that to floating again. It means a bigger stop loss, but you're trading off against a bit bigger commitment that they are actually going for a buy. Because now they're mitigating this imbalance on this candle here. And who's to say that they won't go lower towards that buy zone that we saw earlier on? And also we've got that Swiss news at 8:30, which may or may not affect the euro. I mean, one could say I might not be bothered about this because I'm on demo, but like I said before, I do treat my demo account as if I was playing in a live scenario. And because of the 8:30 Swiss news, I'm prepared to let this one go. Well, I wouldn't have acted on it anyway yet, because I'd like to see price up here for a higher buy. But because we got news in 9 minutes time, you know, I'd say to myself, well, let the Swiss news play out, and then maybe come back like 8:45 and see where we are then. Even though it is Swiss news, but Swiss is heavily connected to the euro. The Swiss is what we call holding currency. So in other words, it's like gold. When you play the gold against the USD, in bad times, for example, in bad times, when you're trading the US dollar, if it gets a bit too choppy in there, people get a bit too nervous. They put their money into gold. Same with the euro. If the euro or any currency is getting a bit too fractured for them and they don't quite know what's going to happen longer term, they open up their Swiss bank account and put all the money in the Swiss bank account. So that's what I mean by Swiss is a holding account. So seeing that scenario, that has convinced me more than ever that maybe, and because of in 7 minutes time, we've got Swiss news. So I'm not really interested in that as a trade. Quite happy to come back when probabilities are a bit higher. And what we could do is just for a bit of we'll see if I can I know. Yeah, we'll just keep it there. I'm not really interested in taking that trade because of the Swiss news at 8:30. It must be pretty important for FTMO to flag it up like that. So we'll just have a watching brief on this one. Again, patience. You've got to learn to suffer, not suffer from FOMO, fear of missing out. And also, you've got to learn to be patient and choose the best probabilities that you think you can make a trade. Because even though I guess the vast majority of you are on demo, you should care about that and treat it like a live and use it to sort of formulate your future and treat this seriously. Sorry, don't get me wrong. I guess most of you are, but sometimes we need to be reminded of that, me included. So we've got 5 minutes to go now before the news. I mean, that's in my view, yeah, this is a more riskier trade because of the news like in a minute. I mean, the news might come along and all of a sudden you'll find a big spike going down there and take your stop loss out, even though you think it's looking pretty good at the minute. And it's not connected to the euro. We shall see. And all the time we're in sort of a consolidation sort of period, really. It's not very inspiring. Just like this scenario here, where you had to sell. Now the sell. Now we've had a buy alert. The next one is a sell. That I'd be more interested in the sell going down towards there than I would be taking the buy. I mean, if you're taking that sell now, you'd be pretty worried. But although once there, I could have possibly put my stop loss to my entry, and as you can see, just there, I would have been. It would have been. I wouldn't have lost any money, but I wouldn't have won any money either, because that's over. Just down there is over 1% of your overall trade. Give it a bit of wriggle room, which I would have done. But like I say, I wouldn't have been in that trade anyway because of the alert up there. Traveled quite a distance down before it actually became underneath the trend line. So you couldn't trade until you were down here anyway. And because of that, I just, because we only need 1 or 2 trades a day. Right, so I've got the, just for something to see, this is the euro. Take that off. This is the euro on the 1 minute time frame. So let's just see what effect that news will have on the euro Swiss, if any. We've got another 1 minute to go. They're kind of building it up into sort of biggish sort of news. So there we go. That's the is it affecting the no, not really. This is the euro Swiss. So that's, we're not even on news time yet. Another 10 seconds to wait. There could be a rather large bit of volume coming in 5 seconds time. Or it might amount to nothing. Oh, there we go. See that? Look at that. Look at that. Wow. Look at that. That's a 85. That's a 40, 50 pip move. There we go. And what would it have done to our trade? Well, now all of a sudden the euro is plummeting as a result. Good news for the Swiss. No, sorry, bad news for the Swiss. What effect does it have on the EUR USD? But look at that. Wow. There we go. Yeah, that's news. That's from there, 85. That's a 60 pip move within, as you saw it just shot up within less than 10 seconds. Pure manipulation for the Swiss. That means all the little Europeans are coming in and putting their money, taking their money out of the euro and other currencies and putting it into their Swiss bank accounts. So that might reflect on this within the next 10 minutes or so. Support and resistance line there has been breezed past. There we go, look. You just don't know how the euro is going to react to that news. It's starting to react to it now. Is it going to react to that news in a good way or a bad way? Formulating opinions. Is it good news for the euro, bad news for the euro? Shall we carry on down for a deeper sell going into this imbalance or not? Kind of glad I'm not in this trade because basically you're beholden to the bankers' opinions and how they disseminate it as good news or bad news for the euro. The Swiss suddenly creeping up like that. Certainly reacted off within 32. That's only 4 pips. Nothing like the Swiss move, but the euro's steadying the ship because the euro's a lot bigger currency than the Swiss. But it will react off that in time. That Swiss hike. And incidentally, if you were feeding off that now, what you do is, what I tend to do is just, this is called an anomaly. So you go to the bottom of the anomaly, to the top of the anomaly, and put a sell limit or buy limit at the 50%, and then trade. But not interested in the Swiss because it's a holding currency. I'm only interested in the EUR USD because of what we're doing now. So we still don't know how they're going to disseminate the news of that 50 pip, 60 pip hike on the Swiss. They don't have to react right away. But they will react, no doubt. See how it came to fill out that imbalance there? But this to me, this trade, because of that Swiss news, I mean, although the spikes weren't too volatile, could have been. That spike could have come down here and took us out. Oh, that was at 8:30, reacting off the Swiss news. Bit of volatility, which is quite rare for the Euro USD. That's why we picked the Euro USD, because it's one of the least volatile, because it's a steadier ship. But things did get a bit volatile there, reacting off that Swiss news. And the volatility could have come down here quite easily. So this, to me, this trade here would be more of a akin to gambling than an actual trade. And look at these spikes now, indecision, and now it's possibly reacting off that Swiss news, maybe. And we're seeing again accumulation. So the overall sense is I don't feel good about that trade at all. And indeed, look for a higher probability trade for the rest of the day. And really, I'd be wanting to take a sell of a seller. The next alert is a sell alert, and maybe continuing on down this scenario here. Over there. Making sure I'm 2 pips away, of course, which is there. And 2 to 1, which would be down there before the buy zone, which is nice. Let's see if the zones of, oh right, we've got a new buy zone. Look. Interesting. And right, okay, a new buy zone has been drawn up while we've been chatting. So we're in a buy zone now. So really, to carry on, right, and indeed, we would have been taken out on that trade there. So that's good, but we've got a new buy zone here. Here, these are orders, sell orders. So mark that up there. Buy orders, sorry, loads of buy orders there. So I want to see price get down below that. Lots of hurdles to get over now. But see, the trend line is still green. That's where I need to put my stop loss on the trend line. Want to see price get below here, that buy zone, and the trend line to turn red. Right, getting into a trade here. Anticipating that trend line is going to turn red anytime. Anticipating the volume. We passed the buy zone area for the number 1 buy zone. And we got in there. So we'll look at it on the, got in there. Actually, I was a bit. Trend line's gone red on the trading view. Brings my 2 to 1 just down there. And maybe they're going to be looking to tap into this imbalance down here. That's the way I'd be reading that. So, all in all, I'm glad I didn't get into this trade here. Well, I wouldn't have got into it because of the news and all that. And they were building it up, and boy, did it deliver a 60 pip move, which would affect all all the top 8 currencies really in different degrees. They'll all be disseminating that news now. But we are right. Okay. That's the buy zone down there. So that's disappeared, that buy zone. We're acting off this one down here, but like I say, when price gets down to there, I shall be looking to put my stop loss to my entry. If it gets down to there, I should say. Because that is a buy zone and we need to respect that. So I'll put my stop loss to my entry. If we get down to here, 2.5, 2.7. Now let's do this. Oh, we're done now. Bring that over there like that. Bring that over there like that. Yeah, that'll do. So the MT4. Put the MT4 like that. There we go. So that's where we are at the minute. Trying to make this as big as possible, but oh, that'll do. So there we are. Looking forward to I've got my line here, so I know if price gets down to this, I'll put my stop loss to my entry and have a risk-free for the rest of it if it does happen. Looking for the fact that maybe price will come in to tap into this imbalance that's been created on the hourly time frame. But we'll see. It's a bit too far ahead to think that far ahead. Sorry. Right. Get that out of the way. There we go. Of course, an awful lot of imbalance has been created here as well, but they know there's some orders down here. Will they come and collect these orders before showing up to regard that imbalance, or tap into there before doing that? They need to redress this imbalance here at some stage. The timings, it's just all about the timings really, when they'll actually do that. I mean, there might be millions of pounds of euros or yen or dollars, whatever, tied up down here that they want to try and grab that equity for themselves in this buy zone before they go and do anything else. But us as traders, it's our responsibility to look after our equity as much as we can. And now I've gone down half. I'm going to bring my stop loss down to my entry. So I've got a risk-free trade going on now. So bearing in mind we are now in a buy zone, or getting towards the buy zone. So it alleviates my anxieties a bit more. If you ever do suffer from anxieties, because you're risk-free now. And indeed it is carrying on down. Another pip or two, and we will be another successful trade. Of course, this is my own take on trading. Other people, other professionals or whatever they want to call themselves, do act differently. I mean, some are more risk averse than I am. Some are less risk averse than I am. And so now what I could do now is, as we get new parabolic SARs, put your stop loss on the parabolic SARs as they come down. So you are earning money as you go. But as you can see, the parabolic SAR is where the entry is now. A little bit more, please, and then we can have a happy scenario. But I wouldn't like to put it any more further down than that at this stage. But I will now onto this one here. So at least I've got a little bit for my efforts. Only $300, but you know, it's better than nothing. So the theory is that because we're in the buy zone, price comes up here and swallows that parabolic SAR, flips that parabolic SAR down, and we could have a deeper buy on our hands. But we're safe now. If it does that, I've earned $297, is it? So I've got a little bit for me time being with you guys this morning, although I'm on demo. But like I said, I treat my demo account like a live account. Always have done. Well, not always have done, but for many years now I've done that. And now, same again. Stop loss comes down with the parabolic SAR. Same scenario. If that gets invalid, now I've got $521 for my time, which is nice. If it comes down, takes us out. Well, it's unfortunate we didn't reach our 2% target, but I've got some money for my time, which is good. Because then that candle could come and swallow that parallel SAR, push it down there, and then because we're, like I said before, because we're in the buy zone, I could well see it maybe trying to get to this purple line here, And obviously we would have, right. Put it there. Now I've got $700. Oh, what's going on here? This one on TradingView has flipped earlier because the streams are slightly different. Oh, there we go. So I was taking out there, and that equates to nearly 1%. Yeah, 0.92%. But like I say, I got $700 for my time, and I was in the buy zone, as you can see. Hang on. I'm in the buy zone. I mean, not to say that price could come down here and get out 2% at the end of the day. Let's just stay on and see if it actually does. But because the parabolic SAR has flipped now below, I'm happy a bunny now, knowing that I've done that. At least I got a bit of money for the time. $700, I think it is, on £100,000, $100,000 account. So I can live with that. Happy day. And we'll see what happens, because we are in the buy zone now, as you know. So it's collecting buy orders. This and if it does come down to get our 2%, well, so be it. Perhaps you could learn a bit from that. Learn to be maybe more patient, be less nervy, more risk adverse, maybe. But if it does shoot up with a buy alert down here eventually and shoot up, you've got peace of mind that you did the right thing. And both scenarios are possible. So really, it's like the flip of a coin. Do you be more risk averse and do what I did, or less risk averse and do what I did, or more risk averse and keep your stop loss up here, or maybe down at your entry or whatever, and wait and hope that price will come down to meet our 2%, so knowing that we are in a buy zone, and maybe price will come down to meet the imbalance. It will eventually. There's no doubt it will come down, but we don't know the timings of these things when that will actually happen. And don't forget, we have lots of imbalances up here that need filling as well. Depends when they want to do it, you know. So there's two ways of looking at it, really, and up to your own individual risk aversion, what you want to do with it. We'll stay on a little bit just to see if it would have done the 2%. But like I say, we're in we know we're in the buy zone now, so a bit more risky. In actual fact, I'm going to throw the chat open because this will be interesting to me. I'm going to throw the chat open and just ask generally of the people who are on this morning one question. would you have taken, you would have got your 2%. Would you have taken it up there when I took it, or would you have had enough risk to take your 2%? So please write in the chat, take it, or just put take it or 2%, please, if you can, if you would. Be interesting to see what sort of reaction we get off this. So if anybody would care to write, just put take it there, or 2%, because there's no doubt about it. If you would have waited for that scenario there, you would have got your 2%. You would have taken it, Ian. Okay. Just want to, Steve, take it. Yeah. All right. The bird of the hand, indeed. So 2 people have answered. You would have taken it. Using the SAR, yeah. Wow. See, there's 2 ways of looking at it. You can do that using the SAR, of course, or you can do it knowing what you know about price action and looking for these points down here and having some confidence in maybe price tapping into this imbalance area. So there's not a wrong or a right answer. That's the thing. It's nothing wrong or right about this answer. It's just interesting for me to see what the majority would do. There we go. So somebody somebody said he waited to have my stop loss lowered now since the lowest price was broken again. Indeed, you can look at it that way as well. But overall, the most important thing is we protected our equity. And like I said, I got a bit of money for being with you guys today. Well, I would have if I done doing it live. I would have got myself $700, which is okay. But as the Academy 55 strategy is, we know, I know, and I've shown you guys many times that by waiting for the 2%, we get a very high win rate. And what we do, but especially new people and risk less adverse people would rather do it that way. And people, everybody's different. People are different. So, well, look at me wittering on. It's 9 o'clock. Anyway, now we're breaking into the imbalance. Got to wind things up. I hope you enjoyed the session today, and I brought a little bit more of a insight into my way of trading and how I perform and look at the charts and stuff like that. So I hope you got a little bit of out of that. And no trading tomorrow because of all the red flag news. So have a great weekend, everybody, and we'll come back strong again next week. So cheers for now. Bye.